Hello and welcome to the March 2018 edition of TAXtalk. My name is Sarah Ghaffari and I'm a technical manager in the tax faculty, and with me today I have Frank Haskew.
Hello Sarah.
Hello Frank. Frank is the head of our tax faculty, and we're also joined by Peter Bickley. Hello Peter.
Hello Sarah. Hello Frank.
Peter is the chair of our Employers Tax Committee. You look after the employment tax and NIC lot. So we've got a lot to talk about today. Obviously we had our spring statement yesterday. We didn't think we would have lots to say on the spring statement, but actually there was quite a flurry of activity in the early afternoon. Lots of consultations.
Yes, there was quite a bit. I mean, did you want me to kick off, Sarah, and say a few?
Yeah, why don't we start by just a sort of overview of what the Chancellor said in terms of the forecast, and we've got the costings for Brexit now as well. Let's kick off with that.
Okay, so as we said, this is a new budget cycle really, where effectively the old spring budget has been replaced by the autumn budget, and the Chancellor said that he was going to make no major new announcements in the statement yesterday, but would announce some new consultations. And actually I think he was pretty much true to his word.
He stuck
to his word. The speech was billed as somewhere between 15 and 20 minutes, but of course we timed it almost half an hour, so already he's sliding backwards. But he did stick, as we said, to his word, and we haven't had any major new tax announcements, either taking effect immediately or with effect from 6th of April. And I think in terms of the tax world, that has been very much welcomed, and there was a lot of very positive press for that. So I think my only comment would be how long it will last remains to be seen. It probably helps that you've got a minority government, maybe.
Perhaps. So in terms of the OBR, the figures and the deficit and that sort of thing, do you want to just give us a rundown?
Yes, so the OBR published their latest forecasts, obviously 4 months ago from the previous set, and it was certainly painting an improving picture. Growth was up slightly by, well, from 1.4 to 1.5%, but the forecast deficit for the current year was down from almost 50 billion, say it quickly, by 4.7 billion. That's come down since November. So the Chancellor was clearly quite chirpy that the figures sort of seem to be heading in the right direction. The OBR forecast, though, I think was a bit more cautious than maybe the Chancellor was in his speech. But certainly so far it showed a better picture than in November, but overall the deficit for the next sort of 5 years out, actually there was very little in it, so it's a slight improvement over 5 years, but not massively.
And we've got the numbers for Brexit. It's about £40 billion, the cost of Brexit.
Yeah, so one of the eagerly awaited figures I think was Annex B in the OBR report, and that's showing Brexit at 37.1 billion. So that's comprised of, I've got the figures here, 16.4 billion up to 2020, and then another 18.2 billion over the following 8 years. And then there's a sort of few bits and pieces which I noticed, I think some of the papers picked up on, that could go up to 2064, but those are very small amounts. So all in all, I mean, the figures aren't massive in the greater scheme of things, and quite a lot of that I think would be committed to anyway. So
it sounds a lot, but like you say, relative to everything else, it's
well, considering the OBS forecast was 4.7 billion less. Those sort of figures per year are probably in that sort of parish, so potentially rounding errors almost these days. But I probably also just ought to caution that we've seen the forecast come down by 10% in 4 months, but who knows, by the time we get to November it could be the other way.
Could well go up.
What goes down,
can go up, and vice versa.
Peter, do you just want to touch on this consultation tracker that's been published on gov.uk? It's an Excel spreadsheet, is that right?
Yes, that's right. I mean, it is something we've been asking for a long time, actually, and it looks nice and simple. I haven't quite worked out in what order the consultations are listed on there. But
so it's a spreadsheet that sets out all the current consultations.
Yes, when they were first announced, in which budget, and really sort of going through the consultation and in which finance bill or act the measure will be sort of enacted. So it's actually quite useful, I think.
Really
Yeah.
helpful,
And it has the email address as well, so you know who to contact if you want to send your comments in. And they're hyperlinked, aren't they? So you can access the consultations directly from that spreadsheet. So it's a very welcome, a very welcome tool, I would say. It will help us.
Everything
have a good
you
overview.
want to know about consultations, but we're too afraid to ask, I suppose.
And all in one place.
And all in one place.
Very good.
And that's covered on one of our news items on the website. So if you do want to take a look at it, then you will be able to find the links there. Okay, so we didn't have any new tax announcements or policy announcements, but we did have some consultations published yesterday, sort of early afternoon, didn't we? There were about, I think it was 13 or so.
Yeah.
And those were things that we were aware of and that had been announced in previous budget. Should we just go through a few of them? So, Peter, we've got the tax relief for self-funded training. I know your committee's been doing a lot of work on that lately.
Well, we've been involved with the Treasury and the Revenue on their sort of pre-consultation stage, the call for evidence, and we've had a couple of workshops with them. The idea of it is it's training at the moment is paid for by employers, which sort of self-polices it, and also for the self-employed they pay for it, but it has to be sort of wholly and exclusively for the purposes of the trade. And there's always the problem of the revenue capital divide. And I think what the government's wanting to do is to try and encourage people to upskill and sort of retrain if they need to change their careers, which at the moment wouldn't really be allowed because it's not for the purpose of that employment or that trade. So it's really quite innovative, I think. And I think the government wants to focus on good training, because there have been initiatives in the past which gave rise to lots of claims for sort of hobby horse riding and swimming and all that sort of thing, which are nice things to do, but probably.
Okay, so this is the consultation.
Yeah.
And have they taken forward any of our ideas or suggestions, do you know? Because I think we put forward a few things, didn't we, in the call for evidence?
Well, I think that there's still, it is quite an open consultation, so they have said that they're even sort of willing to consider whether tax relief is the way to go.
Okay.
Which I think is very good, because if you're at the lower pay grade, you might not be paying very much tax. You might only be paying 20%, or you might be out of work. So perhaps some sort of grant system would be better than giving you tax relief when you haven't really got any tax to pay. So I think it's great that the government's being quite open-minded.
I think this is a good one, really, because we've been saying the word productivity a lot around the institute, and obviously the government as well, looking at enterprise and upskilling and education. So I think this is one of the consultations that will hopefully help them achieve that aim.
Well, I think the UK has obviously been lagging behind in growth, hasn't it? So although apparently the growth since the November had improved, but clearly it's a long-term problem. So and education is clearly, and training is a huge part of that.
Okay. We've also got something on the VAT registration threshold, which follows on from the Office of Tax Simplifications paper that was published last year, I think that was now, which we did respond to. So we know the VAT registration threshold has been frozen at £85,000 until April 2020, which is in line with the start of making tax digital for VAT. But they're now looking at this cliff edge that sort of arises, because once your turnover exceeds £85,000, just by even £1, you've got to go through the whole VAT system and process. So do you want to just tell us a little bit more about what they're thinking of there?
Well, I think again it's a fairly open consultation. I think there were proposals perhaps to, we have the highest threshold of any EU country, I think, and I think that quite a lot of businesses do keep themselves below the threshold, and I think the government feels that it's really disincentivising sort of productivity and growth. But I think you probably get that wherever you set the threshold.
There will always be some.
There will always going to be but I guess if you have the threshold much lower, then businesses have probably sort of grasped the metal a bit earlier and register, because you can live, let's say a one-man band, you can live all right on 80,000, but you can't really live on, 20,000, or depending on what your profits are. So I think there's it's going to be interesting to see what's
I mean,
the
I would
outcome
just
is here.
I could say one thing to mention there was that the government, when it raised the threshold, was very keen to keep burdens on business reduced. And I think that
the simplification was to raise the threshold to keep the small businesses out. I think a couple of the things that they're looking at, though, they're talking about, one proposal is where they introduce a 50% cushion. So you would look at £85,000 in a 12-month period plus 50% to almost give some grace to businesses. Another thought is that the turnover threshold would apply over a 2-year period. So 170,000 over 2 years rather than just the 1 year. So there are various ideas, and they've also included examples from other countries as well, and what they do. So I'm sure Neil, our VAT manager, will definitely be responding to that one. So comments welcome as always.
it's going to be very interesting, I think.
I think so.
Yeah.
I think they need to keep it simple, though. So I'm a little bit
Agree.
sceptical about these cushions and doing it over 2 years. I mean, everyone sort of knows the rules at the moment. So I think having cushions, although it would, perhaps make it, decrease the pain, I think it will increase the burden in a way, because there's going to be a threshold, but at a different figure.
Like I say, also there's the making tax digital point, isn't there?
Of course.
Now, you probably know this much better than me, Sarah.
Digital record keeping, yes.
Mm.
So you're over the VAT threshold. Not only have you got to register for VAT and comply with that aspect of it, but you've then also got the digital record keeping, and you need to have the right software and everything in place.
So it's a double whammy, effectively.
It's almost a double whammy, yeah. So I think for them to look at this area is good, but they obviously need to be mindful of what's happening in the digital space as well.
Yeah, I agree.
Just one more of the new consultations. So there's one on entrepreneurs relief, which is quite welcome, really. So with the entrepreneurs relief, you need to own at least 5% of your shares to get your 10% capital gains tax rate when you sell the shares. But problems arise where the company wants to grow and they issue new shares. Your shareholding will become diluted and you might lose your 5% shareholding, and therefore you lose your entrepreneurs relief. So they're looking at a mechanism which would allow an individual to still maintain that or retain that entrepreneurs relief when they dispose of their shares. So so that's quite a good one, quite interesting.
So they didn't want to just lower the 5%?
I'm not sure how expensive that would be.
Of course, we did have that once upon a time, didn't we, I think, in the Labour government from 1997 to 2008, I think it was.
And of course we've also got investors relief as well, which is the other 10% capital gains tax rate that came in a couple of years ago, but you need to hold the shares for 3 years, so we won't see that coming to fruition for a while yet.
Oh, okay.
So lots of gifts. What consultations did we not get that we were expecting? I think the biggest one is the IR35 consultation, although they have said that that will be published shortly.
Yes, I suppose they need to sort of, I presume they're probably tweaking it, and they need to have a look at the experiences in the public sector to make sure they get the private sector side right.
I mean, have they said that it wouldn't be rolled out to the private sector before April 2019 at the earliest? So that's only 13 months away.
Well, I say when I was in front of the Treasury Committee, almost the cross-party consensus was, why aren't we introducing this in April 2018? So there was a huge feeling that it should be extended.
But there will be a consultation. We've been told that there will be, probably in the next couple of weeks, hopefully. So we will obviously be responding to that consultation. And we're going to look at holding an event as well, actually, here at Chartered Accountants Hall, bring HMRC and our members together to express their views. A little bit like what we did for the MTD consultation a couple of years ago. We had a big event. So we're looking at doing something like that to help feed in some views, definitely. Okay. Oh, Frank, we've missed out the digital economy. Did you want to talk? That was a big one, wasn't it? We did get some papers on the digital economy, didn't we?
We did. I mean, this is sort of one of the main shows in town, I think, at the moment, and it's been kicking around now for quite some time. Of course, it started originally with all the OECD work, in particular, and the BEPS project, but it seems to be moving on from that now, I think. So the government put out a position paper last year and has done an update to it. So it's not, if you like, a consultation at the moment. But you can see the direction of travel and the government's thinking, and effectively it's focusing on 3 areas really. So there's the whole concern about multinational avoidance in this space, and what are the characteristics of those businesses that increase the opportunities for cross-border avoidance. Then you've got remote sales, as they call it. So, you know, make digital platforms, you can sell things in any country without having a physical presence, so that sort of blows a hole in the whole permanent establishment and the recording of revenues. And then we've got a sort of new thing coming out, I think, which is, can you tax the user-created value, which isn't currently sort of recognised, so how can you sort of get a share of that? And that's the way the thinking seems to be going, and the thrust of the latest position paper is that we think that we can effectively look to get, if you like, a tax charge based on some of that user-created value that's happening, say, in the UK.
That's going to be incredibly hard to measure and define, though, isn't it? I mean, I know it's early stages at the moment, but thinking ahead.
It's early stages, but you know, we've seen the diverted profits tax, for instance. So the UK, I mean, it's said once again it's willing to take unilateral action.
Going ahead.
But this looks like a, you know, we had that withholding tax on royalties as well, consultation last year. But when you read it, though, it would need significant changes to the current OECD the whole framework, really. So, you know, and they're talking about changes to all the transfer pricing guidelines and all the profit attribution rules. So, you know, you sit there and you think, okay, but how do you reconcile that to what the OECD is doing? And actually, you know, can you get international consensus on that? And
moving away from the traditional taxing profits to looking at taxing revenues as well, it's just a whole different.
I think taxing profits is an endangered species in the long term, because the digital world doesn't really recognise profits as such, does it? It recognises flows, in fact, money, information. So I think in the longer term we're going to see, you know, tax on flows of money or whatever. And
we also had the cash and digital payments in the new economy. Was that one a consultation paper?
Yeah, well, it's a consultation paper. I mean, again, it sort of ties back to the digital world continuing apace, and apparently 40%, although there's still 40% of cash transactions in the UK, that's now only 15% by value. The paper does recognise that cash is still going to be important for a significant number of people, particularly older people.
Yeah, exactly.
Indeed, as myself, probably Peter. I still like cash up to a point, although I don't have any on me at the moment. The other thing is, though, I think they're still looking around the whole evasion area, and the fact is, if you look at other countries around the world, they actually have rules about cash transactions in terms of, I think it's, they mentioned that places like France, you're not allowed to make a cash transaction more than 15,000 euros, and the US banks have to report large cash transactions over, well, $10,000. So when you add all that up, you can sort of see that cash I think, you know, we could well find that we're going to cash up to certain limits. People are going to have to start maybe reporting it, or maybe just be an outright ban on it.
I fear another trust registration service type register coming along. I don't know.
Well, I think, you know, money laundering is all sort of ties in with that, doesn't it?
It does. Yeah, that's just what I was thinking while you were talking. There's the money laundering aspect and the accounting for, well, I'm not going to say accounting for profits, but tax evasion aspects.
Okay.
So there's a lot to play for, I think.
Absolutely. Okay. I think those were probably the main consultations that we wanted to pick up on. Leaving the spring statement aside and the tax announcements, should we just go back to IR35 and off-payroll working in the public sector? Because as we've said, we're expecting a consultation about the rollout to the private sector, but obviously you look after the Employers Tax Committee. What have you been hearing about how things are going? We've had the BBC case, which has been reported in the last couple of weeks.
Well, I don't think it's been a wholehearted success in the public sector. because the public sector is still meant to consider, employment status rules. Would you be an employee if you weren't working through your company? And I think some of the public sector bodies, at least initially, were sort of just saying, right, we'll put you all on the payroll, even if you weren't really an employee. And under the law, they're supposed to consider on a case-by-case basis whether the workers
so sort of blanket decisions being applied, presumably because of fear of penalties and getting it wrong is so great. Okay.
Yeah. I mean, it's simpler to do it that way, but of course it is more expensive because once you're on the payroll, you've got to pay your national insurance, employer national insurance, and that sort of thing. So I guess, I suppose the hirer would probably want to make sure that the contract with the workers make sure that the worker bears the cost of it.
And in terms of working out that status, how are the employers or the public authority, how are they going about that? Are they using the government's tool?
Well, I would imagine so, because if you use that tool, then the revenue will stand by its decision. That's the check employment status tool, but it's a little bit discredited because it seems a little bit biased towards employee, and it doesn't include one of the sort of ready-mix concrete case tests, which is mutuality of obligation. Mutuality of obligation, moo, which actually you do need moo in every contract, but actually you need not just moo, but you need mutuality of obligation to say this is a master-servant contract, to use an old-fashioned term. So it's not just mutuality of obligation, you need that extra bit as well.
So a couple of problems there, and then also we've got the accounting issue as well.
Well, you're all over
I've got the accounting issue, being the small business lady,
it's right up your street.
Going back to my debits and credits, I love it. So this is where we're looking at the personal service company, so the individual providing the work. They're receiving a fee from the public authority, and the first question is, well, what do I record as turnover? Should it be, let's say, £10,000, which is the amount I invoice, or should it be, for example, £7,000, which is the cash the company physically receives because the public authority has dealt with all of the taxes? So is it 10 or is it 7? And we've got sort of tax rules which have created this accounting issue, and we've got Companies Act saying something, we've got FRS standard saying something else, and we're not too sure what the answer is at the moment, are we?
No.
Well, it's only going to get worse, presumably, if it gets
public sector involved as well.
We've had meetings with HMRC to talk through with our financial reporting faculty to go through the logic of why it would be this number or this number, but I think our next steps really are to get the Financial Reporting Council, the FRC, to have their view on it, because it is an accounting matter. And for HMRC and the FRC to be in agreement that this is sensible, it's a true and fair view for accounts, and also for HMRC you're going to get the right amount of tax.
Well, it doesn't really matter from a tax point of view, because whether it's 10,000 or 7,000, it's a tax nothing in the company.
Because the tax has already
because the tax has already been paid, and it's really the personal liability, I suppose, of the worker. And if the company pays out the 7 to the worker, then if it's paid out through a salary, then it's non-taxable, non-nickable. So you sort of tick the box, as it were, on the software that says it's a non-taxable thing.
The only problem is if you had to report the 10,000, you'd have a £3,000 profit hanging around in the company's accounts, which the tax rules do not allow a deduction for, so there would be no cash to pay the tax on this notional profit. So the saga continues, shall we say, and we hope to be able to resolve it and put something out for both accountants and those working in tax as well. So.
I mean, there are lots of sort of fudgy ways of doing it, but do they comply with the law, and do they comply with FRC sort of reporting account requirements?
Correct. So
we'll leave it in your capable hands.
Thank you. Thank you. Okay, Frank, I think you refer to this next bit as the forgotten finance bill.
Yes, I was rather proud of that, actually.
Which one is it?
Well, which one is it? It was a finance bill that seems to have been kicking around for quite a long time now. The Finance Bill 2017-19, unusual title. But we're expecting to get royal assent tomorrow.
Quite a small one, isn't it?
by modern
by
day
modern
standards.
standards, it's 187 pages
tiny.
long, so it's 50 clauses, 12 schedules, which is, by comparison with the blockbusters that Peter and I have been familiar with for about 10 years or more, is actually quite modest. And it will be the only Finance Act this year, so as I say, we'll get the Finance Act 2018, but I say we call it Forgotten Bill because I think people sort of gave up making comments, and it seems to have been stuck in the system now for quite a long time, but there's still quite a lot of important provisions in there that will effectively now be on the statute book. I'm not sure we've got a huge amount of time, but if I just run through some of them maybe. So we got, for instance, the transfer of the married tax allowance after death and the ability to go back 4 years. Diesel car supplement going up from 3% to 4%. Some further changes to those disguised remuneration rules, very close to your heart, I think, Peter, that were introduced last year, but some further close company rules and also further information provisions, and also extending them to self-employed as well. So quite a lot there. Then we've got all these EIS, VCTs, and this risk to capital provisions, which are now going to be on the statute book, and so it's the significant risk that you could potentially lose your capital. And we've got these, I must say, I hadn't realised that MOO was an acronym, but
we've got another
KICS, knowledge intensive companies. So that's where you can put an extra £1 million EIS into a knowledge.
That came out the patient capital review, didn't it? Yeah.
So that's going to be on the statute books.
I think another good one just to mention is the the indexation allowance, just to remind people that that's frozen, isn't it?
From January to 1st of January 2018, but that again will be clause 26, so presumably...
You're doing a pub quiz tonight, Frank?
Well, interestingly, they made very few changes to this bill, so all the provisions that were in the very first one that was published have stayed exactly the same.
They've retained, okay.
So I don't know what that says. So
I'm not sure either.
Probably also just mention the SDLT as well, of course. That's first-time buyers in particular, going up to 300,000 and then 5% up to 500,000, so potentially a £5,000 tax break. So
about 60,000 people have benefited so far.
That's good.
So, but quite a lot of complication in that first-time buyer provision. I've already had, even though I'm not an SDLT person, a number of people coming up and asking about it.
I did have somebody come up to me at Tax Club actually to ask me about a situation where somebody had inherited a house and then had bought a house, and
I've had something.
Okay, we might need to exchange notes on that. Well, I think, as you say, we are running out of time, Frank. But before we do wrap up, Peter, obviously the 5th of April is looming. So if you could just give us a quick rundown, maybe of your top 3 or 4 forms for employers and deadlines.
Okay, yes. Well, I suppose end of year payroll. So don't forget to tick the final final FPS box on your payroll to say it's your last payment that you're making to any employee this year through the payroll. Give your P60s to employees by the 31st of May. Payroll benefits in kind, you need to tell your employees, unless of course it's on the pay slip, in which case they'll have the information. P11Ds by the 5th of July, pay the Class 1A by 19th or 22nd of July. Class 1A, if you're payrolling benefits, don't forget to put the Class 1A on the P11DB. They'll have accounted for the tax in the payroll, but the Class 1A has to be accounted for on the P11DB.
This sounds like this could be one of our new tax bites, our mini webinar recordings. I think that's probably a good idea, actually. Get all that down on a few PowerPoint slides.
Yeah, and just a quick last one. If you want payroll benefits next year, then make your tell HMRC by the 5th of April and tell them which benefits you want to payroll, and you can do them all apart from accommodation and beneficial loans.
Okay. Well done.
So that's my quick rundown.
Excellent, thank you very much. Put you on the spot there at the end.
Not at all.
Well, I think that probably is all we have time for, but we do have a few webinars coming up that you might be interested in. Caroline and I will be presenting a Making Tax Digital webinar on the 12th of April, which is free to all ICAEW members. That will be on some of the common misconceptions and answering lots of questions that we've had over the last couple of months. So that should be good.
Will be.
Anita and Sue have recorded a Happy New Tax Year webinar, which summarises all of the 17-18 tax year changes and things like the personal savings allowance, the trading allowance, and things to watch out for. So that one's on the website too. And all of our webinars are on icaw.com/taxfac events. You can find the list there.
Is that all one word, TAXfac events?
It is.
No hyphens?
Yes, no hyphens, absolutely. So I think that's probably all we have time for. So thank you for joining me today.
My pleasure.
And thank you for watching.
Pleasure.
And we'll see you soon. Bye-bye.
Bye-bye.
Bye-bye.